So carrying on from our last video, we're going to have a look at the timing differences between a bank statement and a cash book. So let's firstly look at outstanding lodgements. So these are deposits that are not yet cleared in the bank. So it's where the business has recorded money paid into the bank in the cash book, but the bank hasn't processed it yet. For example, a cheque paid in at the end of the day, and the result there is going to be that the cash book shows a higher balance than the bank statement. Next, we've got unpresented cheques or outstanding payments. So a business records a cheque or a payment as soon as it's issued. So we're going to record that in the cash book, but the supplier might not have cashed it in yet, and so the bank might not have recorded it yet. And similarly, just due to timing differences, the bank might not have recorded that in the bank statement. And the result of this is going to be that the cash book shows a lower balance than the bank statement does. Next, we've got bank charges and interest. So this is where the bank deducts charges or they add interest automatically. That's going to appear on the bank statement, but in a lot of cases, the business won't have updated the cash book yet. And the result of that is that the bank statement balance will show a lower balance than the cash book. Next, we've got standing orders or direct debits. So these are regular payments that have been set up directly in the bank. So things like rent, subscriptions, etc. And the bank processes these automatically, but the business may not have entered them yet into the cash book. So the result here is going to be that the bank statement shows a lower balance than the cash book does. So just stepping in really quickly to let you know that all of the mock exams are available on the website. So Rebecca's Finance Tutorials on Podia. So if you just go to mock exams on here, we're going to have even more available on there. So there's 4 at the moment, all for level 2 bookkeeping, but we're going to have principles of bookkeeping controls and others on there very soon. And something very, very new and exciting, and something that a lot of you have been asking for. So you can't see it currently just on this screen. However, they are going to be uploaded before this video has been published. So you're now going to also be able to have access to my study notes. So all of the notes that you see on screen in the video, you can download those as well going forward. So there's going to be another section on here, just like we've got mock exams, so you can download those study notes. So let's get back into the video. Next, we've got direct credits, backs and faster payments. And this is where customers may pay straight into the bank. So the bank statement is going to show that income immediately, but the business won't have recorded the receipt yet in the cash book. And the result of that is that the bank statement shows a higher balance than the cash book does. And finally, we've got errors. So we could have business errors where we've got transposition errors in the cash book. Maybe something's been entered ever so slightly wrong into the cash book. We might have a bank error. They're rare, but they can happen. But whichever way that error is, it needs to be corrected on either the bank statement or the cash book. So to summarise in terms of the main differences, we could have outstanding lodgements, which are deposits not yet cleared, unpresented cheques for outstanding payments, bank charges and interest, standing orders and direct debit payments, direct credits, backs and faster payments, which is your income, and errors. So let's now take a look at the actual reconciliation process. So where are we going to start? So the very first place to start, I would always recommend, is checking the opening balance on the cash book and the opening balance in the bank statement. So the best thing to do is almost a ticking exercise in this case, where we're going to match the transactions from the bank statement to the cash book, like you can see here. And that's just going to leave us with all of those balances that don't match and those transactions that don't match. Now that we've highlighted there is one item, which is cheque 206 supplier B for £1,000, that's in the cash book, not on the bank statement, we're going to add that to our reconciliation in just a moment. So here we've got our closing balance per the bank statement, and what we need to do is add the income that's in the cash book, not on the bank statement, and deduct any payments that have gone through the cash book that are not on the bank statement. And what we should find by the end of it is that our balance here is exactly the same as the closing balance in the cash book. So there you go, that's bank reconciliations in a nutshell. So I hope it helped you. In the next video, we're going to have a look at correcting errors. But I'll just say it's always really, really good to hear from each of you on the channel. And I enjoy looking at all your comments and seeing where you're up to with your studies. So please do reach out, let me know where you're up to. If you found the video useful, if there's a certain video you want me to do next, let me know. Connect with me across all the social media platforms like TikTok, YouTube, LinkedIn, etc. And yeah, otherwise I will catch you on the next one.